I'm Kyle with Fundamentals of Finance, and today we'll be talking about high gas prices and when they might come down. Keep in mind, this is not financial advice and is my opinion only. Since I've been talking about inflation a lot lately, a lot of people have been asking me to get more into the specifics of why gas prices are so high, and more importantly, how long are they going to stay so high? Ultimately, like many things in life, it comes down to supply and demand. So I'll be sure to touch on how some of the key factors have impacted those to get us to where we are today, what's changed, and what can happen in the future. To understand how we got to where we are today, we need a little historical context. In 2008, oil prices were even higher than they are today, which is early May 2022 at the time of this recording. In the mid-2000s, oil companies licked their chops at the high prices and drilled more and more oil, massively ramping up production. Then the financial crisis hit. A lot of people lost a lot of money. There was a recession, and people really weren't spending as much. Not as many people were flying. Businesses that used oil and manufacturing weren't making as much. Everything slowed down. So supply went up a lot in the mid-2000s, and then demand fell a lot in 2008, 2009. The oil price fell from more than $140 a barrel down to about $30 a barrel. Oil companies lost a ton of money because in many of their wells, it really isn't profitable to drill when prices are below roughly $40 to $80 a barrel, depending on where they are. Eventually, as the economy recovered, prices came back up over the next few years. Demand picked up, oil companies again invested in more capacity, and then the economy in China, a huge source of global demand, slowed down in 2015, sending the oil price tumbling again. For the second time in less than 10 years, oil companies got burned by overinvesting in the good times and then having too much capacity or supply in the bad times. Investors, like big institutional investors that have the ear of the management teams, expressed their extreme displeasure with this environment of overinvesting in the good times. Keep that in mind because it'll be more important in a minute. Fast forward to 2020, the pandemic hits, everything locks down. Hardly anyone is driving or flying, factories are closed, the price of oil goes below zero for the first time in history. There was so much excess supply out there that there was nowhere to store the oil that was being produced. Obviously, oil companies were not doing much investing in new capacity while their facilities were closed, and even after things began to open back up, they've generally been more disciplined than they had been historically. That brings us to today, May 2022. While they haven't been investing in much new production capacity, COVID-19 lockdowns have largely subsided in most of the world and people are ready to go out and live again. So, demand has picked up while supply has been constrained, hence why the oil price has risen fairly steadily. Now, you'll notice I haven't mentioned Russia yet. I think a lot of news media outlets want to blame the war in Ukraine on the spike in oil prices since Russia is a large global oil producer and a lot of countries don't want to buy oil from them anymore, which effectively means less supply out there. The oil price had already risen from below zero in April 2020 to more than $80 a barrel in October 2021, months before Russia invaded Ukraine. So the bigger underlying drivers have been that oil producers have been less willing to invest heavily in new supply, having been burned before and been told by their large shareholders that they don't want them to. That demand came back faster than many people expected. Now, the situation in Russia has led us to a supply shock, which has increased prices even further. That's far from the full story. So, what's next? Well, in the short term, what happens around Russia is really important. If somehow the war ends soon and the world keeps buying Russia oil, prices could come down. I'm no military expert, but most of the experts I've heard from consider that a low probability event and think the world could drag on for a while. On the flip side, if Europe decides to place an energy embargo on Russia and stop importing their oil, that could cause prices to go up a lot. So far, they've been pretty reluctant to do that because it could hurt some of the European economies as much or more as it would hurt the Russian economy, given how dependent they are on Russia for oil and even more so for natural gas. So, two unlikely but possible scenarios that could send the oil price up a lot or down in the short term. If neither of those things happen, or, well, even if they do, the other issues we've talked about will still likely be the biggest driver of the oil price in the medium term over the next couple of years. Will oil producers start drilling more? And will it be enough to meet the increasing demand? As of right now, the amount of planned production does not appear to me to be enough to meet the expected increasing demand. And it's hard to tell how long the pressure not to overspend on production will keep the oil producers cautious. So I could certainly imagine a scenario where oil prices go higher from here, but it's really hard and generally not a good idea to try and invest when something is already really high and guess where the top is. At some point, prices will get high enough to either curtail demand, lead to more production, or both, which will send the oil price back down from wherever it is when that happens. In the very long term, like decades, many people expect the oil demand to fall as a lot of its uses are replaced by renewable energy sources, but that's over decades, not months. And right now, the importance of reliable energy supply is as apparent as ever, with oil being an important part of that. So are those of you out in California going to keep paying over $6 a gallon for a while? It's quite possible that you could, but eventually market forces are likely to take over and send prices back down to something a little more manageable for those of you that haven't bought a Tesla yet. I hope this has helped you get a better understanding of what's been driving oil prices and what could impact it going forward to help you equip you with the tools you need to make better investment decisions. If you really want to learn how to invest, check out my free investing webinar workshop below called the 9 Habits of Successful Investors. The link is in the description. Thank you for watching, and I will see y'all in the next video.